Hey guys, what's up and welcome to a new Tesla update video. My voice is still a little bit hoarse, so keep that in mind. I'm still a little bit sick, but I'll do my best to give you guys the info as per usual in this video. So if you enjoyed, don't forget to hit that like button. This is not financial advice, and of course my membership section is live for $2.99 a month. You get my thoughts intraday as Tesla moves. But all that being said, Tesla rather closing down 0.77% on the day compared to the market, roughly in line with the market. In all honesty, in terms of the redness. So nothing unusual there relative to the market, but let's discuss what this means moving forward, because this is where things, in my opinion, start getting interesting. And I think next week should be a very interesting week. So first and foremost, the most important thing to note here, as I talked about in my membership Discord, or not Discord, sorry, on YouTube, is simply going to be this situation, as you can see right here, right? We did finally fall below this channel that we were in, essentially. Well, I don't have the top part of it also, but essentially we were constantly, ever since down here, we came up, retested it several times. Then we kind of hugged it for the whole day. And then we finally, then in the last, 2 hours, broke below it and continued going down lower. So there's a few important things to note here, right? The way I look at it, at least, again, this is the 1 hour time frames. First and foremost, you can see the RSI is most definitely heading lower, which I mean makes sense because it is going lower here, but the RSI is sitting at a level that is lower than back when Tesla was sitting stock price wise all the way back at the 255s, right? Keep that in mind. So we're lower on the RSI up here than the RSI was here back when Tesla was substantially lower in price. So that's a bit of a kind of a bearish divergence ish, if you will, right? As obviously the more obvious one is going to be this situation right here. Let's say on the 4 hour, the daily, right? Where as Tesla continued going higher, the RSI continued making lower lows and lower highs, right? So that's just a super duper, like, ridiculously obvious bearish divergence. It's one of the most textbook bearish divergences I have seen. Now, moving forward, what does this mean, right? Now, this doesn't mean that Tesla has to completely and utterly collapse here. Technically, it doesn't have to. To me, the way I look at it is one of two things. First and foremost, right, it did close, obviously a bit of a weak close. The whole market actually closed quite weak. We'll go over SPY and QQQ at the end or later. But it's on thin ice, and the reason I say it's on thin ice is because it did obviously break below this. The downtrend, or the uptrend rather, should have technically finished right here and now, and the downtrend in theory should begin here and now as well, based on the fact that it broke below this trend line, right? This overall ascending, wedge, or whatever you want to call it, channel. But the thing is, it did close right at that level that it's still technically finding support at, which is around this kind of 274, 275-ish level. As you can see, several times it came down to this level and it got bought up. Now, this case, unfortunately, it doesn't really get bought up because it pretty much closed right at that level, which is why I said it's on thin ice. Now, the thing that the bulls absolutely, unquestionably do not want to see, like, in my opinion, the worst case scenario here for the bulls will be a massive gap down on a Monday. If Tesla opens up, like, I don't know, let's say roughly like 1.5%, maybe 2%, for whatever reason. Again, I'm not saying it will, just in theory. If it does, that is going to be exceptionally bad for Tesla, because then it would actually set up that island reversal pattern, and that would be quite bearish, on top of also the whole situation that I just described. We have the bearish divergences on the RSI, right? We have an overall break of the ascending channel. We have, of course, still potentially almost like a double top E-ish scenario, right? Where, of course, the overall in the daily, the overall ascending channel that we're in right here, you can see ever since the lows back here, right? We're zigzagging into it. We are at the very top of it, right? So, we're definitely finding ourselves in a bit of a pickle, let's just say that. So that island would just add fuel to the fire, if that makes sense. So they really don't want to see that. However, with that being said, if Tesla does break below, back to the 1 hour, if Tesla does break down below this 274 level, that's when I think at the very least will come down to 265 or the gap fill at 262-ish, right? That to me will be the first level I'll be paying attention to, and the level I would potentially consider starting to maybe add a little bit to my shares, right? Right now I am full cash. I did exit my position, took a small loss, but again, like I said, that was kind of the point of those shares in case we do get a pump, right? But nonetheless, that would be the first level I'll be looking at. Now, obviously, the main level I'm personally still looking at, and again, we'll look at the weekly very soon, is going to be still this gap fill all the way down here. This is kind of similar to what happened, let's say, all the way back here, where we kind of, let this massive gap over here, right? Let's go to the daily. Actually, it's easier on the daily. Where was it? Should be over here somewhere. Yeah. So this is kind of similar to this situation here, where we kind of, left this massive gap, came all the way up, you know, had this little consolidation. I believe this is where we're at right now. We're somewhere around this area right here, right? The pattern is very similar-ish. But the fact is, you know, we came down, we had a massive sell-off, and then we were looking like we were going to gap fill, right? And then, of course, you know, back over here, I was talking about this gap fill, and then as we started getting closer, I started talking about, well, now everyone is looking at this gap fill, and we're either going to undershoot it or overshoot it. In this case, we undershot it, right? We kind of came pretty close to it, like it looked like it was going to fill, no question whatsoever, and then we had a nice bounce. And then we kind of got even closer, and then we had a nice bounce, right? And this feels like something similar to this, right? I think the same thing will happen, right? And that's kind of what happened here, right? I said the same thing. We're either going to undershoot it or overshoot it. We obviously undershot it once again. And I think we'll play out similar to what it was over here. We'll come down closer to this gap fill, and I think we'll either overshoot it or undershoot it once again. Maybe we'll come down to like 237 instead of all the way, ideally, like literally right at the gap fill at 234. Or I think we'll overshoot it and go far below it and potentially go to like, you know, like 220 at least ish, maybe even 215. I think one of those scenarios personally will play out, and we'll of course see how it goes. But when everyone is paying attention to the same level, kind of like what I said over here, that's when I started getting a little bit worried that maybe something a little bit different was going to play out, right? And I said the same thing back over here. So that's going to be the main thing I'm also paying attention to. Now, taking a look at the weekly very quickly, let's remove the drawings for now. You can see, first of all, the weekly candle closure is not a very good looking weekly candle, right? This is like essentially a reverse hammer candle, right? Similar to what we had over here, or like, you know, these three candles right here, especially these two right here, are pretty bullish candles, right? Especially like this one, right? They're nice hammer candles. And now we're essentially getting literally the opposite, right? Because think about it. If this candle is bullish, well, what is literally the opposite of that? Probably bearish, right? You have to kind of put two and two together in that sense. Now, so that's kind of one thing I'm looking at. This is not the best looking weekly candle closure at the moment for Tesla, and the market's not looking as bad, but the market on the daily, pretty damn bad, right? You can see QQQ, pretty much the same candle like Tesla has on the weekly, but on the daily instead here for QQQ, and SPY, pretty much the same thing as well. Very hideous looking candle. Not the best looking candle in the entire world, which tells me that the market might have a little bit of room for a cool off coming up potentially next week, and maybe even going for the rest of the month potentially as well. So we'll see. Of course, we have earnings coming up, right? Earnings season is not too far away, so that can change a lot of things. But, you know, not the best looking candles that I'm seeing right now. Again, weekly for Tesla, daily for SPY and QQQ, which of course affects Tesla. So those are things I would definitely be, you know, being very careful about. And again, also because we're at the top of the channel. Another level I'll be paying attention to is going to be around this 254-ish level, because that's the 21 EMA. So those are the main levels, right? The main levels I'm looking at right now, right? We have, of course, this, support right here, which in theory should act as a support or the gap fill around 265 to 262. That's the first level. Second level, the 21 EMA, which is around 250-ish, right? 254-ish. That's the second level. But the main level I'll be looking at is, of course, the gap fill around 235. That's the main level. And again, if we go back to the weekly, don't forget, like I always say, it's common to retest the breakouts. And ever since we broke out of this teal, kind of blue teal line right here, we've never really retested it. So it still wouldn't completely shock me if we actually do retest it. On the weekly, the 21 EMA is sitting at 214. And if we do, again, usually just staircase up and then elevator down, right? That's kind of the famous saying in stocks. And that applies to Tesla as well, though Tesla feels like it's an elevator both ways in all honesty. But nonetheless, you know, it wouldn't shock me if we do get potentially a retest all the way. Like, to me, this is like the quote unquote worst case scenario, while still keeping the bullish sentiment alive. The worst case in the bullish scenario is, of course, going to be a retest of this breakout that we overall had not too long ago, a few weeks ago, which is this teal line, which will bring us somewhere around the 215-ish, maybe 210s-ish level for Tesla. That to me is the worst case bullish scenario. Who knows what will happen for sure. We have earnings coming up in not much longer, Monday, July 7th, right? Which really isn't that much longer, guys. That's like, July 19th on Wednesday. Sorry, the weekly time frame kind of messed that up. But yeah, on Wednesday, July 19th, which isn't that long away. And the thing about earnings that's interesting to note is the fact that obviously Tesla beat deliveries, right? It was a solid 4% beat, not completely crazy, but absolutely a beat nonetheless, you know, a very respectable beat. Now, with that being said, the reason Tesla beat, as I'm sure if you're following Tesla, is because they have been lowering the prices on pretty much all their models across the board for the past several months, right? So naturally that created more demand. That's just kind of how simple like economics works, really, right? But the question, of course, on the earnings report and, you know, earnings call and everything is going to be, how have margins been impact it, if at all, potentially, right? So that's going to be the main question. And I wouldn't be surprised if margins have been impacted and we do get a bit of a sell-off off of that. But if, as long as Tesla shows the fact that the margins in the Q2, maybe worst case Q3, have bottomed out, and then you're not going to have much more price reduction from here on out, and then margins in theory should only go up from here, but at least hopefully, that to me will be a very bullish sign. And I think that's when, we're going to get a beautiful bounce from one of these levels down here I just mentioned, that I just talked about, right? And I think from there, it should be a pretty good rest of 2023. But I do think the next couple of months potentially could be a little bit choppy until we get into really well into the second half of 2023, where I think things can really turn around once again. And I think things will be a lot more positive once again. Again, that's just, of course, what I'm thinking right now. But again, with the very obvious bearish divergence, again, it's very simple. As you're making higher highs, right? Assess is going like this. The RSI is, of course, going completely the opposite way. So very, very obvious bearish divergences. Again, I personally put a lot of weight into it. I personally value it. Now, bearish divergences on the 4-hour, the daily, keep in mind, that doesn't mean that it has to plummet right here, right now, because the longer the time frame, the more impactful it is and the more weight behind it, but the slower of an indicator it is, right? So this, again, to me, doesn't mean that Tesla has to crash, and really, it obviously hasn't been crashing, even though this bearish divergence has been here for like several days now. What it means to me is that if you were to look out like maybe a few weeks into the future, or maybe even like a month or so or something like that, give or take, maybe even a couple months at, at most, some caution is warranted. That's what it tells me, right? It tells me that the road ahead might be bumpy. That's what it lets me know, right? Again, just my opinion, of course, could be completely wrong. Who knows for sure? But that's what I am personally seeing. We still have the Bollinger Band, which we're still very close to the green line, but you can see it's getting pretty tight, right? We've been consolidating roughly around this overall area, right? Still some volatile moves, but overall we have been kind of consolidating, and you can see the red line is catching up pretty drastically. I will actually even say this is getting a lot tighter than I thought it would, and I wouldn't be surprised if it ultimately, even if we fall, I still think this tightness will continue, and I think ultimately we will consolidate roughly within this kind of 280 to all the way down to 240 range until earnings, right? So I personally would be surprised if we come down to this 215, if at all, of course, before earnings. Like that'll shock me, and I do think that we'll pretty much consolidate up to earnings somewhere within this overall range between 280 and 240. That's my current guess right now. But yeah, so we'll see, I guess, how it plays out. I think earnings will be the main focus, of course, naturally in about 2 weeks, roughly. And yeah, so until then, I think this is the overall range that we'll consolidate for now. But all that being said and done, ladies and gentlemen, thank you all so much for watching, and I'll see you on Monday. Peace.